Great. Thank you very much for having me here today. So by way of introduction, my name's Tom Blomfield. I was previously one of the 3 co-founders of GoCardless, which I started with a couple of friends from university about 5 years ago when fintech was still financial technology, and when quitting your well-paid consulting job to do a startup was still a little bit insane. So GoCardless is a payments platform which enables merchants to collect money from their customers on their website and keep collecting that money via direct debit. It's backed by people like Accel, Boulderton, Y Combinator, and a bunch of others. We actually took an API-first strategy. So we launched our first money-taking platform in about November 2011, I think, with an API integrated into cashflow.com at the time, and then a series of integrations. So GoCardless was an API-first company, almost without us thinking about it. It just seemed the natural way that it should go. So I'm going to talk for about 15 minutes about Mondo. And I'm going to leave about 5 or 10 minutes at the end for questions, if that's okay, because I find them really interesting. So let's talk about Mondo. Banking, especially retail banking, is this vital utility. I suspect if I asked every single person in this room has a bank account, probably has several bank accounts. It's something you need to live your life. It's where you put your salary. It's where you pay your rent or your mortgage. You have a little card or a tokenized Apple Pay device that you use to buy goods and services. You pay your friends, you pay your bills. Without a bank account, it's very, very hard to live. So everyone needs one of these things, but they suck. They're really very, very bad. And that's what Mondo is trying to solve. So we're coming at this problem afresh, and rather than trying to do everything that a bank could do, we're doing one thing, which is the retail current account delivered via your mobile. And I think there are 3 pillars to providing a really special experience. The first one is an obsession with user experience. So you ask someone at a big bank, you ask to see a product person at a big bank, and they'll talk to you about interest rates. That's sort of interesting. A product person for a consumer web company obsesses over things like, how do you present and collect data? How do you communicate with your customers? How do you define their problems or their user journeys and solve those in delightful ways? So user experience is things like, how long does it take me to sign up? Do I need to scan in lots of documents and get them notarized, or can I do it from a phone in 20 seconds? If I want to pay a friend, can I do it from my mobile in a single swipe? Or do I have to get one of those chip and pin things out and go to my desktop and add a payee? That's user experience obsession. The second pillar is technology. And I know a number of other banks are taking a slightly different approach and see technology as a commodity. Technology, back-end technology, is a huge differentiator. Because when your customers come and ask for this shiny new feature that you hadn't thought of when you were building your app, you say, oh, great. And you can get your engineers to build it, and you can ship it a week later, and you can solve your customers' problems in days or weeks, not months or years. So having an in-house technology capability is absolutely vital. And the third thing is a banking license. Because there are a number of companies that do the first really, really well, and the second kind of well, and then don't have the third. And you end up being functionally limited because you're built on top of, pick your bank, Bancorp, Wirecard, whoever it is. And they have legacy technology, they have legacy procedures and policies, and have risk and compliance departments who don't want to help you deliver a delightful user experience. So those, I think, are the 3 pillars of a delightful retail banking experience, and that's what we're building. But I'm here to talk about APIs specifically, and whether APIs are a threat or an opportunity for banks. So I'd like to split that into 2, actually. Oh yeah, banking license coming soon. Going through the regulatory process with the PRA and FCA right now. Not a licensed bank. Important to note. So if you are, I've been a NatWest customer for 16 years. And if you are NatWest and you're thinking about an API strategy, you're probably a little bit scared. So the big 5 UK banks spend more on their retail branch network than the top 5 global tech companies spend on R&D combined, which sort of tells you where their priorities lie. And 2 things have been vital to the retail banking orthodoxy, particularly the current account retail banking orthodoxy. One is the cross-sale. So orthodoxy says you acquire your current account user at a loss, and then you flog them loads and loads of products, and that's where you really make your money, right? So the average bank only sells 1.3, 1.4 products on average. 93% of customers hold products at more than one bank. And some of those products that these banks are trying to cross-sell include things like PPI, which is now a £26 billion headache for the banks. So one of the pillars a traditional retail bank is cross-sale. The second, fees and charges. Now, I've been a customer of NatWest for 16 years, and I get a Dear Customer email. Thanks, NatWest. And this Dear Customer email says, hey, not, you've run out of money, not, you're going to run out of money in 2 days, but you ran out of money 2 weeks ago. And we've sat here accumulating fees and charges, and here's a list. Not even here's a list. You can log on to our website to see how much we've charged you, because we can't work out how to email it to you. Thanks, NatWest. So those two pillars, cross-sale and fees and charges, are the fundamental driver of current account profitability. That's how the banks, broadly speaking, make their money off a current account. And I'm really excited to see Stevie Graham's presentation on Teller, because there's some cool stuff I want to build on top of it. And the first thing I'm going to do when NatWest opens an API is I'm going to write a script. And that script is going to monitor my balance. And when I have more than about 500 quid sitting in my NatWest account, it's going to sweep the money out. And it's going to put it somewhere that earns me more interest. And I can write a script to do that in maybe 1 hour. The second thing I'm going to do is write another script, which, when I dip below £500, is going to sweep some of that money back in. So now NatWest do not get my overdraft interest. They don't get my interest on my fees and charges revenue anymore. If I don't have any savings that I can sweep back in, my script can go out and look at a variety of marketplaces to try and do some short-term borrowing. Or it can talk to my friends and say, hey guys, Tom's 300 quid short this month. Does anyone want to lend him money at a, 5% APR? I'm good for it. Yes or no? You can create these peer-to-peer lenders in the overdraft market without any people. Just a script running on top of an API. So, So if I was NatWest and I was thinking, this API thing is coming, this PSD2 thing is coming, and it's all pretty scary, because malicious people like Tom are there and they're going to script all my revenue away, your reaction is like, I'm going to become a dumb pipe, right? Banks are going to become dumb pipes that are commoditized, and they're left with all of the horrible bits of banking, like ATM withdrawals and payment processing and dealing with KYC and AML and fraud and all of those painful things that banks do so they can cross-sell you loads of shit. And so the reaction, if I was in their shoes, I would be thinking, how can I build features and services on top of my bank to add value? But historically, retail banks have been very poor at that. And instead, they rely on customer inertia. It's such a pain to move accounts, and frankly, if I move to Barclays or Lloyds, I'm going to get screwed just as much. So why bother? So the 65% of banks that are thinking about opening app stores, as James said, it's like, good luck with that. So the question, APIs, threat or opportunity, obviously huge, huge opportunity if you can grasp it in the right way. But to many of the banks who don't have the product centricity, don't have the capability to build out those value-add features and services on top of the dumb pipes. So I'm going to talk about Mondo's approach and why I think actually an API is a huge opportunity for new entrants. So we are taking an API-first approach, broadly speaking. We built our own core banking platform in-house, and we surround it with an API. It doesn't have a conception of a channel. It doesn't know that the customer comes via a phone line or we won't have branches, but if a customer came via a branch or a mobile, the data goes in and out via a data interface, an API. So we have an API-first strategy. We have released our documentation online. We have an API up and running today. And you can see all these endpoints, so you can do things like, as a customer, you can query a list of transactions and say, I shopped at the de Beauvoir Deli, and that's on Southgate Road, and it has all sorts of interesting information like the geolocation, the lat long, and the postcode, and the icons of the merchant. So all of this rich data that we've grabbed from around the internet and aggregated for you. It also has things called webhooks. So when I make a transaction, I can tell Mondo not just to get a push notification on my phone, but to send a push notification to my server. So my server can go and do cool things like check my balance or sweep funds in from elsewhere or sweep funds out to a high-interest savings account. So those are sort of the interesting kind of projects you can build on an API. And we had our first hackathon last weekend. Hilariously, we had a bunch of suppliers. The pizza was pretty good, actually. Day 1 was pizza, day 2 was Thai food. But the pizza won, I think. Our banking partners freaked out when they saw the word hackathon. You're going to hack us. Literally freaked out and threatened to shut us down. So I want to say thank you very much to people who came, people like David here. We had some really, really great stuff built. I'm going to show you a few of them. So one is the Mondo Meter. Now, this is an Internet of Things device with a little servo attached to it, which takes input from these webhooks. So it attaches to a customer's account and monitors your balance from full down to empty. And then as you top up, it goes back to full. It updates about half a second after you make a payment. So pretty near real time. You could build that into a whole suite of products. So you could have LED displays on your wall. You could do really, really fun stuff. This was just a little gimmick, but it's really fun to see it pinging around. Mondo Map. This was really, really fun. So using that GPS geolocation data in the logos, you could see where you and your friends were shopping. So over time, you have a map, and you can kind of ping icons onto it as they drop in, again, in real time. Or you could, what I really want to build with this is, say 10 or so friends go out. You can hook all your bank accounts up to it on a Friday night and see you all sort of spending as you sort of aggregate towards inevitably Shoreditch, and then hit the bar and then sort of all take your cabs home. It'll be really fun visualization. And these are just like, these are 48-hour hacks, right? There's sort of little projects. It just gives you a hint of what you could build. Mondex, there's a naming convention here, you can tell, I'm sure. Let's see if we can play this. I wonder how I play that. Oops. I might have to just flip out. So Mondex. Awesome, that's running. So this is an expense reporting system. So you get a notification saying, remember to tag your August expenses. Apparently it doesn't work in presenter mode, so I'm going to play it like this.
I think you can hit the play button in the presenter mode as well.
Can you see my... Oh, there. Oh, that's how you do it. Thank you very much. Great. So push notification. Remember tag August expenses. Open your app. Scroll through August and check that you've tagged everything expenses. This is the Mondo app, by the way. This is one of my colleagues' accounts. So Hoxton Grill, after we went to the regulator, tag it drinks, fun, and expenses now. Done. I've submitted my expenses. Push notification, your expenses have been automatically submitted to your accounts department. And you get a list of all your expenses. So in real time, you can be tagging your expenses, taking a photo of the receipt, and then it just magically exports to your finance department via the API. Next one. I think this is the final one. This is called Muba. Take an Uber, push notification, refresh your screen, goes to the Uber API to grab in details of your trip. You went from Soho up to North London. So you can integrate into third parties to pull more data back into your account. Maybe that's your TfL journey. Maybe it's your Nectar points from Sainsbury's. So your bank account becomes a repository of all of your transaction data, not just the amount and the date and the time, but all of the rich data around each transaction. You go to a restaurant. Who was in the restaurant with you? Which of your friends were with you? So those are some of the things we built, and a bunch more, which I can't list them all, sadly. But there will be a blog post coming towards the end of the week, which will list them all. So those are the kind of interesting things you can build on APIs. And I think where it leads is a shift from universal banking, where you try and acquire the customer and cross-sell them loads of product, to an idea of marketplace banking, which lets us focus on delivering one thing, and one thing really, really well, which is a retail current account and stopping there. But obviously, customers have a diverse set of needs. So if you need a mortgage or SME lending, we can link out via their APIs to offer those kind of products and services from within our platform. And this is where some of the legacy banks start to run into trouble, because this is the natural evolution of the API strategy. It's the marketplace bank. And the problem that legacy banks have is they have these misaligned incentives. Because they're trying to sell their own product, and then they have this API to bring in a bunch of other products, they don't want you to leave the platform. They want lock-in, right? They want to be able to sell you their overdraft at 25%, whatever it is, or their mortgage, even though it's not the best in the market. So you end up with all these little fiefdoms inside of the banks, with everyone fighting about, no, I want the credit card customer or the overdraft customer. Imagine having that fight with the whole market, because you've suddenly opened up all of your customers to competition. The final thing I should say is, obviously, we're in a hugely privileged position, bizarrely, of having no customers. It's very, very easy for us to take risks like this. It might flop, but the natural state of a startup is failure. If we do nothing, we will fail. If the banks do nothing, that'd be okay. And they'd be okay for a year or 2 years or 3 or 5 or maybe 10 years. And in 10 years' time, all the people who are running the banks today will be retired. And so why bother taking a huge risk on an API strategy when you can just sit around, business as usual, 2% growth, 2% decline, not a problem. Until in 10 years' time, or 5 or 3 or 2, your business drops off a cliff. So it's a bit of a scary future. But I think there are banks who are embracing it. So BBVA, I think, is a real leader in this area. So buying a bunch of startups, Simple.com, design firms, and really trying to push themselves forwards. But it requires a fundamental shift in the way banks make their revenue, organize themselves internally, and a massive, massive reduction in headcount. So the future, beyond the marketplace bank, I think talking sort of 10 or 15 years now, maybe, the future of the bank, rather than making money selling financial product, is the future as an identity and a data broker. Because if we've got these customers, and we've done KYC and AML, and we've had visibility over their paycheck, over their rent, where they sleep every night, where they spend, all of this data. And that data belongs to the customer. But can we enable that customer as a trusted custodian to take that identity to other places and to then purchase new products seamlessly? So instead of having to go through the same boring old KYC, AML sign-up procedures, they just say, hey, I'm going to connect with Mondo. Here is a cryptographically signed package of my identity data, verified to bank grade. I now want a peer-to-peer loan. 3 seconds, single click. So, in conclusion, for banks that are relying on cross-sell and fees and charges to support their current account product, APIs are a massive, massive challenge. I think their hands are going to be forced by PSD2. But for startups for whom doing nothing means failure, taking the gamble on the API strategy is a huge opportunity. So that's everything from me. If I have maybe 3 or 4 minutes, I'd love to open up for some questions, if that's okay, organisers.
Great. Sure. Yeah.
Thank you.
Great. Thank you. Questions for Tom? Okay, cool. So we have one. Oh, well, yeah, interesting. A few questions.
Let's go back. That's my favorite. Let's stay on that one. That's my favourite. Oh, by the way, we're at GetMondo on Twitter, and I'm T_Blom on Twitter if you want to tweet vitriol about how I'm arrogant dismissing huge banks.
Thanks very much, Tom. Very interesting. You said the data is always in the hands of the consumer, the end user. How do you make sure that is always the case, and how are consumers going to be able to monitor that?
That's a good question. So I and we as a bank fundamentally believe that in our relationship with you as a consumer, we are a trusted custodian of your data, and we'll set up our legal terms and conditions such that you own your data. We have right to use that data in an aggregated sense, not in a personalized sense. The danger comes when you share it with third parties, basically. There are technical protocols which enable that transmission fairly simply. It's called OAuth 2. Imagine when you go to a site and you connect with Facebook and it says, this site would like access to your email and your name for sign up. And you say, OK. Or your list of friends or your photos. So you can sort of scope the permission, broadly speaking. So I want to do my tax return, so I want to give my accountant permission to see my transaction data for the last year only, and I'd like to revoke that in 60 minutes, for example, or price comparison. I want my price comparison site to only see my recurring payments. And again, I'll revoke the permission in 10 minutes. That's the technical implementation. The legal safeguards and the data privacy safeguards are obviously much more complicated.
Other questions?
Hi. How do you plan to get loyalty to your application if you've got a fully open API? I mean, what's to stop someone else coming along and kind of disintermediating your user experience and your experiences if they're able to build an API, if they're able to build an experience and an app on top of your API?
Yeah, do the Twitter thing and buy half of them and shut the other half down. No, that is a good question. So our business model is current account lending and a bit of overdraft. And that for us is it's still a concern, but it's much less of a concern because we have a cost base to support very, very low revenue per user. So we're not relying on, I don't know what it, 200, 300, 400 pounds of revenue per user. We can survive on a cost base which looks much more like an email account than a bank account. So, I mean, if app developers come and build a much more delightful app on top of the platform, yeah, go and buy them. I think it would be a nice problem to have, I think, in 5 or 6 years.
Hi, Tom. Mark Ibsen, CTO of Starling Bank. I guess one of the advantages that the traditional banks have got is they've got lots of customers.
Yes.
They've also got mainframe systems that are hugely reliable.
Hugely reliable?
Hugely reliable, yeah.
OK.
Yeah. And I just wanted to understand how, I guess, Mondo and I guess Starling, Atom and Fidel, I've got a colleague here from Fidel, what's your view on how you and others need to address that challenge of a reliable banking platform that's pretty bulletproof? Payments mechanisms aren't always, of course, which you may be thinking.
I don't know. If you look at the recent RBS woes, you sort of you wonder whether there are two questions there. One is that the existing banks have lots of customers. That's an advantage. The second is existing banks have mainframes. Isn't that an advantage? To the second question, absolutely not. You just don't see people. Modern technology companies are not building their platforms on top of mainframes. Go to Google or Facebook or people like Stripe handling billions and billions of pounds of payments. These guys are not using mainframes. You can get much, much better security, stability, performance off modern distributed systems than you can off old mainframes. So I think the technology in the retail banks is one of their it's like a big albatross around their necks. So these guys are spending billions and billions a year maintaining these systems just to try and keep them, their heads above water.
Thank you, Tom.
Thank you.
Thanks a lot.